In a surprising twist, Bank of Japan Deputy Governor Ryozo Himino recently stated that the central bank must persist in increasing interest rates, albeit with caution, due to the looming shadow of global economic uncertainty. This announcement comes amidst a backdrop of fluctuating market conditions and geopolitical tensions, which have kept financial analysts on their toes. While Japan's recent trade pact with the United States offers a semblance of relief, the full repercussions of American tariffs remain veiled in mystery. In a candid address to business leaders in Kushiro, a city nestled in the northern reaches of Japan, Himino emphasized that the potential for a more severe impact than anticipated cannot be overlooked. He highlighted that the global economy continues to tread through murky waters of uncertainty, underscoring the need for measured actions by the Bank of Japan. Himino's perspective is nuanced, acknowledging both the positive and negative influences on the inflation forecast. On one hand, Japan's robust labor market might spur wage hikes, potentially fueling inflation. However, the dampening effect of sluggish global growth and the toll of heightened U.S. tariffs on Japan's economy could counterbalance these gains. Following a temporary lull, triggered by the slowdown from tariff-induced growth deceleration, we anticipate that Japan's underlying inflation will eventually find stability at levels aligning with our targeted 2% objective. Himino elaborated. He suggested that if the baseline scenario unfolds as projected, gradually increasing interest rates in tandem with the improving economic and price conditions would be a suitable course of action. However, Himino refrained from providing specifics on the timing for further interest rate hikes, stressing the importance of avoiding premature or belated adjustments. He did hint that a clearer understanding of the tariff impact on Japan's economy could potentially expedite rate hikes, yet pinpointing the precise moment when the Bank of Japan will gain insight into the severity of the tariff effect remains an elusive goal. In response to Himino's remarks, the yen experienced a slight depreciation, and Japan's Nikkei stock average briefly soared, as market participants perceived his statements as less hawkish than anticipated. The Bank of Japan had previously exited a prolonged period of aggressive stimulus measures and hiked short-term rates to 0.5% in January, driven by optimism regarding the imminent attainment of the 2% inflation target. Despite consumer inflation exceeding the bank's target for over 3 years, Governor Kazuo Ueda has advocated for a cautious approach to rate hikes, citing uncertainty surrounding the implications of U.S. tariffs on Japan's economy. Nonetheless, persistent food inflation and the prospect of continuous wage growth have prompted some members of the BOJ board to warn of secondary price effects, which might necessitate additional rate hikes. A recent poll conducted by Reuters revealed that nearly 2/3 of surveyed economists anticipate another rate hike from the BOJ before the year concludes. As a former head of Japan's banking regulator, Himino has been vocal in his criticism of the central bank's ultra-accommodative monetary policy, positioning himself as one of the more rate hike-inclined members of the board. Himino advocated for the reduction of the Bank of Japan's footprint in the Japanese government bond, JGB market, arguing that maintaining excessive liquidity could introduce unnecessary risks. He proposed a gradual decrease in the size of the BOJ's balance sheet, which includes divesting from risky assets such as exchange-traded funds, ETFs, and real estate investment trusts, REITs. Drawing from the BOJ's past experience in selling stocks acquired from financial institutions, Himino stated that they would deliberate on how to manage their existing ETF and J-REIT holdings. When probed about the timeline for initiating the divestment process, however, he remained tight-lipped. This development has sparked debates among economists and financial analysts, with some questioning whether the Bank of Japan's strategy will effectively navigate the current economic climate. What do you think? Is the BOJ's cautious approach warranted, or should they take bolder steps to combat inflation? Share your thoughts in the comments section below.